Central banks are having a moment in the spotlight with the RBA set to take the stage this week. Meanwhile, the New Zealand market is preparing for the February earnings season. Here to discuss it all is Devon Fund's Head of Retail, Greg Smith. Welcome, Greg.
Hi there, great to be here.
Alrighty, well, let's start across the ditch. Australian inflation surprised on the downside last week. Talk me through some of the market's response and maybe what the RBA will do.
Yeah, for sure. I mean, sort of markets are really sort of following, obviously, what inflation's doing. That's, we had a, really challenging 2022. Much of last year was obviously volatile as well. Then we had that big end to the year, didn't we? Markets really rallied from October and, into January as well. S&P 500 up around about 3%, but more. It's all been about inflation's been falling. Central banks are sort of nearing the end of their rate hiking plans. When are rates going to start to be cut? So inflation numbers are very much front and centre. So for Australia, there's been a lot of second guessing about what the RBA is going to do. Inflation fell from sort of over around about 5.4% to 4.1%. So that was a much bigger fall than expected. That got the market really excited. The ASX 200 hit a record high. We last saw that back in I think it was August 2021. So that was a good bit of news. So RBA meeting this week. More than likely, I suppose, the talk of any further rate hikes is probably going to subside. But much like we've seen with other central banks, they're also playing, and we've seen this with the Fed, also the Bank of England, they're playing it quite cool with respect to the timing of rate cuts. They're talking about wanting to see more data. So we may get a similar story from the RBA. But the good news for that market is looks like rates have peaked.
Yeah, you mentioned the Fed there. They obviously pushed back on rate cuts potentially in March. Were you surprised?
There's a little bit of surprise. So, and I think we are still looking for a number of rate cuts this year, a few less than what the market's been pricing in. So, start of this year, the market was pricing in about 6 rate cuts by the Fed this year. We're sort of thinking more sort of 4 to 5, which is also what the Fed has been pointing to as well. So, I think the big surprise, not so much from the written announcement, was Jerome Powell's address subsequently, which always captivates market audiences, was his assertion that a rate cut in March was not his base case. So going into the meeting, the probability of a rate cut in March was around about 60%. According to interest rate pricing, so that's now dropped towards around 35%. So that took the markets by surprise, but I think we still get those rate cuts as the year progresses, whether it's March, whether it's pushed into May. Interestingly, the probability of one in May has increased to around about 60%. They're just going to want to see more data, which I suppose has been the theme all along. But the good news is, if you look at Fed's preferred inflation measure, that's been coming down. It's really about reaching that nirvana of their interest, so inflation target, really. And they want to see a path towards that, but at the same time, they don't want to sort of let the genie out of the bottle again, as it were. Meanwhile, obviously the economy has been quite resilient in the US, and Jerome Powell made that point. We also had last week the IMF upgrading global economic growth, and a lot of that was to do with how the US has performed. You've got manufacturing even picking up. You've got obviously a very strong employment market. Jerome Powell made the point that the employment market hasn't been this strong in the US for nearly 50 years. So there's lots of positives. The fact that we're possibly going to not get a rate cut in March, I don't think matters too much. And we saw that towards the end of last week as the market sort of started to shrug that off and stocks pushed higher again.
Mm-hmm. And there's been some conversations potentially about rate cuts across the pond in Bank of England. Let's have a chat about that.
Yeah, so it was a bit of a split decision, actually. I think 6-3 in terms of staying on hold with the Bank of England. The only thing I suppose there is that headline inflation recently came in higher than expected, so that's a little bit sort of off trend. So there actually were a couple of dissenters that were looking for a further rate increase in the UK. So slightly sort of different situation. It'd be interesting to see how that all plays out. I mean, the UK is one of the many nations that's actually seeing an election this year as well. So, there's talk of the government putting through tax cuts, to woo voters. The IMF has warned not to do so because that could be inflationary. So it's going to be really interesting to see how that plays out. But, a slightly different situation in the UK and indeed Europe versus what we're seeing in the US.
Given we've had so many sort of conversations about central banks recently, what sort of broad themes are coming out, and are we getting any insight on perhaps the health of the global economy?
I think it's quite resilient. That's been a word that's popped up a lot. And yeah, we've seen it from time to time in the earnings season as well. So I think it has surprised many of the central bankers, particularly the US, and that's sort of really led the way. You've got that very strong jobs market. You've got the consumer has been stronger than expected in the US. Yes, there's been cost of living pressures, but consumers have been coping. But possibly a little bit of difference as well when you look at borrowing rates, vis-a-vis say what we have in New Zealand. So a lot of US mortgage holders are on sort of 30-year rates, so they haven't been as impacted by this obviously move up in interest rates we've seen since the lows of the pandemic, and they've managed to cope. So that's a big engine of the economy. Around about sort of 2/3 of the economy is the consumer. But generally things in the US have been resilient, and the rest of the globe, it probably is a little bit of a mixed picture. So Europe is stagnating a bit. And the UK has had its issues as well. Down under, obviously New Zealand has its challenges. Australia's probably looking a bit better. Some economies have benefited from what's been happening in the FX. Look at Japan. It's been a real boom for them in terms of their where their currency is at. In fact, the Japanese market was up 8% in January, so pretty amazing. Export powerhouse. They've really benefited. And then the elephant in the room is what's happening to China, and we've seen that market, stock market, around about 5-year lows. We've seen Evergrande potentially facing liquidation with concerns around the property sector there, but Chinese growth's actually doing okay. It's actually hitting targets. Could be the surprise packet this year. So, but I think overall, if you look at the net result, it's one of resilience driven by the US.
Well, let's have a chat about earnings season. What's the market expecting?
Yeah, so I think the market, is probably a bit more guarded and cautious about what to expect. Our market, of course, did take part in that rally from sort of late October, early November last year, but not to the same extent. And NZ50 also lagged in January as well. It's clear from recent corporate confidence surveys and the like that. Look, there's an element of optimism, particularly since the election, but there's also an element of caution as well. And there was one survey last week that talked about looking at own activity intentions of companies, and it was sort of pretty muted. I think perhaps could be a bit of divergence between companies that have overseas operations and sort of our internationally focused versus those more domestically focused. I think our economy does have some challenges. We've got around about a third still to come off very low mortgage rates. The consumer sector from various prints looks like it's sort of encountering some headwinds, which I think is what you can expect. That said, some retailers are actually doing all right, and there was a really strong update from Briscoe's last week. But I think offshore-facing companies, could be continuing to do quite well. With if you look at like those sort of facing China, even though we've talked about the challenges facing China, some companies are doing quite well, and there's probably also a bit of a view towards the outlook. In fact, A2's been a real standout. If you look at the January share price performance, a lot of negativity around declining Chinese birth rates. The outlook there seems to be improving. That they're taking market share and the like. Companies like Tourism Holdings, that's been increasing its exposure outside of New Zealand, making acquisitions in Australia. So I think it could be a two-sided story. Those internationally focused companies with those more domestically exposed.
And what else is on your calendar this week?
Well, GDT, that'll be an interesting one. The milk prices have been picking up, obviously very important to our economy. Time will tell whether we get another positive read there, but it's certainly been an encouraging trend recently, and it's good for a lot of fortunes of our economy. And then the unemployment print as well, so that's expected to tick up slightly from 3.9% to 4%. And I think this is going to be really interesting in the context of what the RBNZ does. And it's very clear that many central banks, as we saw with the Fed, are being cautious about talking about rate cuts. And we saw Paul Conway, the chief economist, last week effectively push back on talk of rate cuts. Now, inflation has been coming down in New Zealand, perhaps not to the same extent as many other countries, but look, it is coming down, and we face some challenges. So, unemployment at sort of around about 4% might not raise too many alarm bells just yet, but it'd be interesting to see whether that thematic changes, if we see some sort of softer data prints in New Zealand. So I think they're always going to be interesting, whether it be the unemployment print, whether it be retail sales, whether it be GDP, which we'll get in March as well. So that will be an interesting one. But jobs market's still pretty strong overall. Should come in around about 4% in terms of that unemployment rate.
Wonderful. Well, thank you so much.
My pleasure.
For more content just like this and all the latest business and political news, head over to mbr.co.nz.